Good morning. We will pay attention to the buyback of shares in a company today. There are three different ways that shares can be bought from the shareholders. The first one is where you will buy it back at the original issue price. The second method will be where you calculate the average price of the shares and you buy back at the average price. And the third method is where you buy it back at a higher price than the average price. The third method is the one that the students mostly have problems with, so I will pay attention to the third method. It is very important to determine your financial year. So if we look at this information, the following information was provided on the 28th of February 2016. That is the beginning of the financial year. And then they give us information on the 28th of February 2007. So our current financial year is from the 1st of March 2016 up to the 28th of February 2017. First of all, we have to determine what is the balance in the ordinary share capital account. So any entries before this financial year will then be the opening balance. Cullen Limited has an authorized share capital of 200,000. Remember, we don't use the authorized share capital for any calculations. It will only appear in the note. 50,000 ordinary shares were issued on the 1st of March at R2 each. So that means 50,000 times 2 gave a capital amount of 100,000. On 30 September 2015, that's before our current financial year, 50,000 was issued at R2.50, giving an additional capital amount of 125,000. The opening balance is 225,000 Rand for capital. Okay, on the 30th of September, an interim dividend of 10 cents per ordinary share was declared. We have to look now and see how many shares that we have at that stage. The new shares were still not issued because they only issued on the 1st of October. So on the 30th of September, we had that 50,000 ordinary shares and we had additional 50,000 that was issued at a later stage. So the interim dividend we will calculate on the shares issued in the past, 100,000 times 10 cents, and that will give me 10,000 Rand. On the 1st of October, we issued 100,000 shares at R2.80. So it means that the money was paid into the bank, 100,000 times R2.80, and that will give us 280,000 Rand. So my capital increase now. A final dividend of 20 cents per ordinary share was declared. This is after the new shares were issued, so it means the final dividend will be calculated on the 100,000 plus the additional 100,000, and we have 200,000 shares at the moment, and we will calculate 20 cents on each one, so that means the final dividend will be 40,000 Rand. It was decided at the annual general meeting to buy back 20,000 shares at R2.80. A check was issued to the shareholders. These shareholders are entitled to the final dividend before the shares were bought back. So we already calculated the dividend on the ones that we will buy back. If we pay out an amount, we first have to determine what is the average price to see if this R2.80 equals the average price, or whether it's more than the average price. So in the beginning, we had 50,000 shares at R2 each. That gave us 100,000 rand. Then there was 50,000 issued again at 125,000 rand. Then there was 100,000 issued at R2.80, and that gave us 280,000 rand. So if I add up, the total number of shares is 200,000 shares. The value of all the shares that we issued is 505,000 rand. So we have to calculate what is the average price now. So we will take the money value, 505,000 rand, divided by the number of issued shares, 200,000, and we calculate that the value is R2.53. So that is the average price of the shares. For this buyback, we are going to pay R2.80. So it means what we will take out of the bank will be 20,000 times R2.80. That will give me 56,000 rand. Then the ordinary share dividend decrease can only be at the average price. So it means that the capital will reduce at average price of R2.53, and that will give me 50,600. The additional amount we will have to take out of retained income. So it means the difference between R2.80 and R2.53 is 27 cents. And 27 cents times 20,000 will give me 5,400 rand. So I can never decrease the capital with more than we originally put into the capital account. Therefore, I can only take out the average price out of the capital account. And any additional amount above the average price will be taken out of the retained income account. To determine what is the balance in retained income, we must take the information into account. At the beginning of the year, they said that shareholders' equity was 265,000. Shareholders' equity consists of the share capital and retained income. We calculated that the opening balance of ordinary share capital was 225,000. So if I deduct that, it means that the opening balance of retained income is 40,000. So I will put in the 40,000 as an opening balance. When we buy back the shares, it means that I can take out of the ordinary share capital account the average price, and that means the capital will decrease with 50,600. In the retained income, I will decrease it with the additional amount that we paid out more than the average price, 5,400. And you first have to do the buyback before you will do the calculation to determine what is your closing balance.